In a challenging market like today's, everybody's looking for an edge. Question is, where do you find it? Growth stocks, value shares, momentum plays? All these strategies and others have their virtues. But if you really want to increase your chances of earning competitive returns and building wealth over the long term, the single most effective thing you can do is hold down investing costs. The reason is simple. Every dollar you pay in fees reduces the amount of return you get to keep. So by opting for low-cost investments over ones with bloated expenses, the higher the return you're likely to earn and the bigger the account balance you're likely to end up with over the long run. How much bigger? Well, let's take a look at the effect that going with low-cost funds could have on a retirement nest egg over the course of a long career. Let's say you're 40 years old, earn $50,000 a year, contribute 10% of your salary to a 401k, and that over the next 25 years, a diversified portfolio earns 7% annual gains before expenses. How much will you have come retirement time? Well, if you invest in funds that siphon off 1.5% a year in expenses, your 401k balance will come in around $352,500. But if you go with lower cost funds that charge just 1% a year, your balance grows to more than $376,000. And if you reduce costs to 0.5% a year, it totals over $400,000. And if you manage to hold the line on expenses to a slim 0.25% annually, your nest egg weighs in at nearly $416,000. Now, I can't promise you can duplicate these results. For one thing, your 401k plan may not offer a good roster of low-fee choices. Besides, even though lower-cost funds in general tend to outperform higher-cost alternatives, it's not the case that every low-cost fund will do better than every high-expense fund. There will always be exceptions. The point, though, is that by avoiding high-cost investments and opting for those with lower expenses, you'll dramatically increase your return potential and the likely size of your nest egg at retirement time. So the next time you review your 401k investments, make sure you're taking advantage of low-fee options, especially index funds. And if you want to put this low-fee strategy to work in IRAs and taxable investment accounts, you can easily identify cost-friendly funds by using Morningstar's Fund Screener or by checking out our Money 70 list of recommended funds and ETFs. This low-fee strategy may not get you the size returns you'd like, but it can help assure that you'll pocket more of whatever returns the market delivers.